Hey guys, welcome back to another video. So in today's video, I wanted to talk about a stock that I think is positioned to break out and start producing some pretty good returns for their shareholders. And that stock is NIU. So if you guys are interested in videos like this, be sure to leave a like, subscribe, and comment down below to let me know what you guys thought about the video, and let's get started. So the stock NIU is just that, it's ticker symbol NIU. And NIU Technologies is, as it says right here, a holding company. It engages in the provision of urban mobility solutions, specifically the sale of electric bicycles and motorcycles. The company was founded in China in 2014 in Beijing, and they currently have about 623 employees. And so in this video, I'm going to be talking a little bit about what exactly NIU does, as well as who their primary competitors are, some opportunities that I see for NIU to not only expand their business revenues, but also increase their global footprint internationally. And I'm also going to be analyzing some price targets that analysts have set for NIU for the foreseeable future. And then I'm going to go in depth and analyze NIU's financial statements, such as their income statement, their balance sheet, and their cash flow statement, so that we can get a better understanding of NIU's current financial position. So I'm gonna head over to NIU's website right here, and this is their official website, as you can see right here in the top left, NIU. And if I scroll down a little bit right here, you can see that these are a couple of statistics that I guess NIU is keeping track of for their business. And you can see that as of today, there are about 52 to 53,000 active riders. And being that NIU is an electric vehicle company, you can see that total CO2 emissions saved is this colossal number right here, and the amount of trees that they've planted. So they're definitely pushing an environmentally friendly business model, which I think is very beneficial for them, especially now in 2021 and onward, with the increased urgency around governments around the world, specifically in the big countries like the United States, Canada, New Zealand, Australia, and Europe, specifically the UK, focusing on shifting from carbon fossil fuel energy to cleaner energy such as electric vehicles, which is great for NIU because as an electric vehicle company, more people are going to be mandated to buy their vehicles, which is just going to increase their revenues and their profits in the long run. So as you can see right here, this is a map of everywhere that NIU has a store located. So specifically, you can see that they have a pretty heavy footprint in Europe, with countries in the United Kingdom, as well as in Poland, Spain, France, Belgium, you get the idea. And then they also have a couple of countries located in the United States and in Mexico. They don't have as heavy as a footprint in the United States, which is an opportunity that I see for them to expand because the United States is obviously an enormous opportunity. And they also have a couple of stores in China. And funny enough, considering that they are a company founded in China, I would have expected that they would have had more stores in China, which is a little bit interesting. But something that's a gigantic opportunity for me that I see is that they don't have any stores in Australia, a couple in New Zealand, but not much of a footprint in Australia. So that's a pretty big market there for NIU to capitalize on, and something that I see that if they expanded into in the future, say in the next year or next 5 years or so, that would increase their revenues a lot and improve their customer base by a ton. So now I'm going to head over to Marketbeat. And for those of you who don't know, Marketbeat is basically a website that produces a lot of organized data around businesses and stocks that you might be interested in analyzing and investing in. And specifically, they're really good at showing some statistics and ratios surrounding the financials around certain companies, as well as showing the price targets that analysts have rated specific companies. So right here you can see NIU Technologies stock forecast, price and news. They're currently trading at $26.39. And if I scroll down a little bit here on the right hand side, you can see a little bit of data surrounding NIU. And I think that this data here is actually really valuable. So you can see that the industry that they're currently in is motor vehicles and car bodies. They're traded on the NASDAQ, They have around 600 employees, and they were founded in 2014. And for these stats right here, these stats specifically talk about certain like sales and ratios for the last full year that NIU was in business. So you can see that the annual sales that were recorded were around 300 to 400 million dollars. The current price that they're trading at to the sales that they had, that ratio is around 5. So they're currently trading at 5 times sales. And you can see that their cash flow was 37 cents per share. So they're currently trading at around 71 times free cash flow, which is pretty high, but in this sector of electric vehicles, especially now, that's not unreasonable compared to the average for the market. Their book value per share is around $2, and then their price to book value, basically their share price and what it's trading at compared to the actual book value of their business, is 11. So that's not too bad. Their profitability, earnings per share for the last fiscal year was 33 cents per share. Their net income was around $4 million, and their return on equity was 22%, with a return on assets around 11%, so that's all really good. And then right here you can see the current ratio. The current ratio, for those of you who don't know, is a very useful metric. It basically measures the liquidity of a business. So the way you find current ratio is by taking the current assets and dividing them by the current liabilities. Current assets are assets that are going to be turned into cash within the next 12 months, and current liabilities are like debts and things like that that have to be repaid within the next 12 months. So current ratio basically measures how likely it is that a business will be able to meet its payments for its liabilities. And ideally, you want to see a current ratio that's higher than 1, because that means that the business has enough cash to pay off all of their short-term debts. And the quick ratio, if I were to open up and look this up in Google, you can see that the quick ratio is basically current assets minus inventory divided by current liabilities. So this is also very important because inventory can sometimes be very hard to liquidate and turn into cash. So making sure that the current assets, everything besides inventory, are enough to cover current liabilities is also extremely important. And as you can see right here, the quick ratio is 148, so they have that covered. Now I'm going to open up the analyst ratings just so that we can see what the overall market sentiment is surrounding NIU Technologies and their current share price. And you can see right here that the average price target for NIU is $36.75, which is a 39% upside from their current share price of $26.41, with the low price target of $15 and the high price target of $47. And if I scroll down here a little bit, we can see who gave them these price targets, and you can see that overwhelmingly, out of the 7 price targets that they were given by analysts, 6 of the 7 have rated NIU essentially as a buy or an outperform or overrate, with only one of them rating it as a sell with the price target of 15. So if NIU does reach these analysts' price targets, even on the lower side with like 23 to 40 or 36, that would be an enormous profit for current shareholders who are currently owning the stock. And lastly, I want to look over their financial statements on Yahoo Finance, because businesses run on profits, and it's important as an investor to get a good look at a business's financial statements before they invest in it. So you can see right here that the price to earnings ratio for the trailing 12 months, TTM, is 61. So that essentially means that NIU Technologies share price is currently trading at about 61 times earnings, which compared to where they were trading just like a couple of months ago, they were trading at about $50 per share. So I think that even though that's still kind of high in my opinion at 60, basically their price to earnings ratio being like trading at 60 times earnings, I think that compared to where they were before, this is relatively pretty low, obviously. And looking at their financials, which is the most important thing, you can see that their income statement over the last couple of years since 2017, their total revenues have steadily been increasing, which is a fantastic sign, especially for a business that's pretty small like NIU, which only is trading at a market cap of about $1 to $2 billion. This is a very good sign. Most businesses around this market cap, from what I've seen, don't have as strong financial statements as NIU does, which is something that analysts have touched upon with their price targets, is essentially them saying that businesses run on their financials, and regardless of what NIU is currently trading at, their financial statement looks very strong. So that's why some analysts are very optimistic about NIU's share price and their future growth. You can see that their gross profits have been increasing and their net income has also been increasing. This negative amount right here, from what I can tell, it's mainly due to their increase in tax provision, which happened just probably from them expanding into different markets, different countries, and them having to adjust for varying tax rates. So you can see that on their balance sheets, their assets have also been increasing, and their liabilities, they actually have been keeping steady control over their liabilities, paying some of their liabilities off from 2017 to 2018, increasing their debt from 2018 to 2019, and then increasing it again from 2019 to 2020. And their total equity has also been increasing, which is a great sign for shareholders. And then you can see that their total debt has been getting paid down pretty consistently. It's been around the same area while their total assets have been increasing. So that's a great sign, seeing that a business that's growing is also paying down their debts and taking on leverage when necessary to help increase cash flow to grow their business where necessary. And then finally, the cash flow statement. We can see that from their operating cash flow, this is basically the cash flow that comes from the actual business and the operations that happen within the business. We can see that their cash flow has been increasing, not so much from 2017 to 2018, but from 2018 to 2020, it has been steadily increasing. Investing cash flow is basically where a business invests its cash outside of the business operations. So we can see that they've been investing pretty heavily in outside operations. And then their financing cash flow is essentially where they've been bringing money in, or what debts they've been paying down. So we can see that steadily, especially in 2018, they brought in a lot of financing, but they've been paying down their debts in 2020, which is also a good sign, with their ending cash position being $39,000 after everything else is paid off. And that's basically it for NIU. I think that this is a very promising business. They have a lot of potential. They have strong financial statements, and like I said before, they have the opportunity to expand their global footprint, not only in the United States but in Australia, to help them better compete against some of their electric vehicle competitors like NIO and Tesla and things like that. And since they're specifically focusing on electric scooters and electric bicycles, they aren't directly competing against NIO and Tesla, who focus more on electric cars. And so I think that that positions them to focus on a niche market and expand their customer base that way, focusing on a consumer base that doesn't really have many other businesses to go to and many other companies to go to buy electric scooters in this current market. So that's basically it. Thanks for watching.